Hey, Central Virginia, with all the political and financial turmoil in our world right now, are you wondering how that's affecting our local real estate market? We're going to cover that today in your May 2025 housing market update. Tariffs, federal layoffs, wild swings in the stock market, lions, tigers, bears, oh my, there's a lot going on in the world right now. We've got a lot of nervous folk, and a lot of people have been asking me recently, hey Chris, how is this affecting our local real estate market? How is this affecting my home value? And what I'm gonna try to do, what I'm gonna attempt to do in this video today is to give you some factoids, give you some data so you can come to your own conclusions and give you some perspective as opposed to sound bites, hot takes, or kind of what the wind whispered in my ear. So let's jump right into it. So there are definitely some very smart people right now that are predicting we could be heading into a recession at some point this year. Mark Zandi, chief economist of Moody's Analytics, said that the risks of a US recession upwards of 35% in his opinion as to could we entering into a recession, a US recession this year. Specifically to the real estate market, a recent survey found that 70% of Americans are concerned about a potential market crash in 2025. That is not a small number of people. All right, so let's actually jump into the factoids, into the data. So historically, what happens to the real estate market in a recession? Well, so if we look at the last 6 recessions, we'll find that in only 2 of those 6 recessions have home prices actually gone down or depreciated. There was a minor depreciation in roughly 2% in 1991. And then of course, we all remember the 2008 Great Recession where we saw an incredible decline in home values, roughly 20%. I think the important thing to keep in note with that is that we entered into that recession, or the housing market was the one that got us in trouble in that particular recession. And you might be saying to yourself, hey Chris, this actually feels a lot like 2008 though. We've had a great run up in home prices. There's a lot of fervor around the housing market, and I totally get it. The facts that I would submit to you is that housing bubble in 2008 was brought upon us by 2 factors. Number one, we had an oversupply of housing, so we were building more homes than there were actually a need for. And then we also had a lot of bad lending practices at that time, where you had a lot of folks getting into homes with minimal or no equity, putting little to nothing down. So they were in a very poor equity spot, and it was very easy to walk away for a lot of folks from those loans because they had no skin in the game on those homes, on those purchases. Alternatively, if we look at the data for today, you'll see that we are finally returning to 2009 home building levels. So we had a 14-year stint there where we underbuilt new construction homes, under the 50-year average and under what we even built in 2009. So we're just now returning to 2009 levels of new construction. So we're finally getting back to where we're starting to meet the demand that's out there in the marketplace. But keep in mind that we had 14 years where we were underbuilding homes, and we are still making up for that deficit that we experienced during those years. And secondly, Americans are sitting on a tremendous amount of equity right now. Currently, roughly 70% of homes in the United States are either free and clear or have more than 50% equity. So the balance sheet of the United States homeowner, by and large, is looking very good. It's a much different story than what we were experiencing during the 2008 recession. Now, one thing that we do know about recessions is they typically equal falling mortgage rates. As you'll see in this graphic, we do expect to see mortgage rates continue to come down, whether or not we enter into a recession, but certainly a recession usually brings about lower mortgage rates. Now, here's what all the smart people are saying about 2025 home price forecasts. So if you look at the graphic, you'll see these are the 23 of the top projectors, or forecasters rather, for home values. And what you'll see is that 21 of the 23 are calling still, as of April 1, are calling for home price appreciation, meaning values are scheduled to go up this year. There's only 2 folks that are calling for price depreciation, Morgan Stanley being the most negative of the Nellies, so to speak. And even Morgan Stanley is only calling for 2% depreciation. And keep in mind, this is on a national scale. Now, you might be asking yourself, hey Chris, but what about the local data? What about our local Central Virginia market? Like, national data is great, but more importantly, you guys probably want to know what's going on in your backyard. So what I will tell you is Metro Richmond is actually outperforming most markets in the country right now. If we look at the data from our Central Virginia multiple listing service, our median sales price is up to $399,000, which is actually up 6.1% year over year from this time last year. The number of pending sales, basically the number of homes going under contract, is actually up 9.6% year over year from where we were this time last year. Days on market has been dropping. We're currently sitting in about 8 days on the market median. So that basically means the time between when a homeowner puts their home on the market and when it goes under contract, the average time on market is currently 8 days. Sellers are getting on average 100% of their asking price. So that means, yes, there are some folks that are maybe not getting 100% 100%, but there's certainly folks that are getting over 100% of their asking price still in this market today. And then last but not least, month supply of inventory is currently sitting at 1.1 months. Month supply of inventory is the metric that we look at that basically tells us if we're in a seller's market or a buyer's market. At 6 months supply of inventory, we're in a neutral market. Anything above that is a buyer's market. Anything below that is a seller's market. So not only are we still in a seller's market, we're still in very much an extreme seller's market at 1.1 month supply of inventory. So in short, what I would submit to you is not only do we have a long way to go before we're in a neutral market, we have an even longer way to go before we see a buyer's market or a market in which home prices are going to depreciate. So what does this all mean for you? So I'm going to give you 3 tips that we're currently giving to our seller clients, as well as 3 tips that we're giving to our buyer clients, as we do always. The first one for my sellers, one of my favorite quotes from Mr. Warren Buffett is, "Be greedy when others are fearful." So what I mean by that is we're seeing a unique opportunity for home sellers right now, because not only we're already starting in a low inventory situation, but we're getting into an even lower inventory situation currently, because given all the political and financial turmoil, we're seeing where there's a lot of angst, and a lot of folks are not putting their homes on the market because they're unsure about their future, the climate in general, which is creating an opportunity for those that are putting their homes on the market, because they're one of even fewer homes now for buyers to choose from, and there's definitely still a great amount of buyer demand out there in the marketplace that's being unmet. Secondly, if it's not compelling, it might be selling, but not for a premium price. So one of the dynamics that we're seeing in the market right now with a little bit of angst for buyers is that if a home is what we consider a cream puff, which is a very technical term for a very nice move-in ready kind of renovated home, those homes are selling quickly. They're selling for a premium. A lot of times they're selling in multiple offers and selling above the asking price. But if there's nothing compelling about a home, if it's just kind of your standard everyday the home that hasn't been prepped, that hasn't been staged, that isn't compelling, what the kids call mid, then those homes are either not selling quickly or not selling for great prices. If you are looking for that premium price, you've got to put the premium product. And then last but not least for my seller clients is beat the summer. So what we know is of this month on May 31, when the kids get out of schools, what we see historically in the real estate market, it doesn't fall off the kitchen table, but we do tend to go into somewhat of a summer slump where the market slows down just a tad, because as kids are out of schools, buyers have their attention spread in other places. They're going on vacation, they're doing other things. Kind of they take their eye off the ball of the housing market for a few months. So if you're somebody that is thinking about selling this spring and you want to capture the highest price possible, I would submit to you, you want to have your home on the market before May 31. All right, for my buyers, mortgage rates may be in flux right now, but they are still scheduled to go down. So that is good news for you. You know, there's been some volatility. We've seen rates jump up, down, quarter, a half a point, but by and large, experts are still predicting that we are going to eventually, it might be a bumpy ride, but we're eventually going to see mortgage rates tick down. Secondly, prices are continuing to rise. So if you are somebody that's sidelining yourself waiting for mortgage rates to come down, once again, they will eventually do so, or at least everybody's predicting they will. However, if you wait to buy, you're going to be buying at higher prices. We are still seeing where prices are continuing to rise. So I just would keep that in mind if you're somebody that's waiting or sidelining yourself, is that as you do so, prices are continuing to rise and your dollar is stretching less and less every single day. And then last but not least, cream puffs, which is our very technical term for nice move-in ready homes. Those homes are still seeing very competitive situations. So keep in mind, if you're going after a cream puff, if you're going after a house that is really nice, that is turnkey, that's in a good area, that's priced well, more than likely you're going to be in a multiple offer situation. More than likely you're going to have to be very competitive in your offer. That's not every property in the market right now, but for those premium properties, very much still the case. So guys, that was your Central Virginia May 2025 housing market update. If there were any questions or concerns that we didn't address, throw it in the comments, shoot me a DM. If we can help you in your real estate purchase or sale, shoot me a DM. Thanks for tuning in. Look forward to seeing you next month.